Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, war fears. Big news of the day, Trump doesn't know if he wants to sign the memorandum of understanding with Iran, so start shooting at each other again. But today we are this candle right here on a chart of the S&P 500, the SPY. We are Wednesday the 8th of July, and we started out badly, but then we recovered. Okay, we recovered somewhat, okay? I just want to say, guys, that this market is just consolidating at highs after a big move. This pattern usually regulates to the upside, okay? And you can see the strength in this market, okay? It really wants to go up, but you have a double-barreled headwind in the war. Like there's always a war overhang. Plus the semiconductor space has been in trouble. It has been dragging down this market, okay? It wants to go up, but you have those two headwinds tearing at its heels, holding it back, creating drag, okay? So first, let's talk about the technical picture, guys. We always talk about it. And yes, bullish. Trading above the 50. We went below it for one day, but trading above it, hugging it the whole time, trading above it till this day, despite all the negativity that you hear out in the press, it's still, the market is holding on. Very, very bullish technically, okay? I'm really, really impressed at the strength of this market, okay? And let's see what the sentiment says. Yes, we're at fear. 42. Okay, we went as low as at the borderline, never went to extreme, but that's okay. Okay, we still have plenty of room to go higher. Some of the sub-indices are still trying to rotate out of it, except the breadth is still at extreme fear. Okay, the put call options are neutral. Nobody knows what's happening. You have the market close to highs, and you have like bad news coming out, and yet it's holding. So people are uncertain. That's perfect for the bullish case. Okay, so yes, bullish. Stay the course. Okay, I'm looking to go long in sectors that have been beaten down. Okay, so let's get to the main event, war fears. Okay, today, Trump says he's not sure he wants Iran deal as Hormuz Strait strife deepens. Okay, the Straits of Hormuz are closed, start shooting at each other. Okay, so I guess the war is back on. And what do you see? You see oil catching a strong bid for the past 2 days. Okay, but this is not surprising. We were expecting this. We were saying around a week ago that we were getting to oversold territory. After a big down move, we were expecting an up move. And yeah, the news helped, made it go up. And where did we say it would go? Well, the 200 was the first one. It hit it. It's around the 200. And upwards to $79 a barrel, which is the neckline here, this level, this blue horizontal line. So I was expecting oil to go there just on a normal bounce. Okay, we could get that. Do I expect oil to go back to the hundreds? No, I don't think so. I think Trump really can't afford for this war to go on. I mean, the longer this war is on and the closer we get to the midterms, the more devastating Trump's defeat in the midterms will be. Okay, I don't think he wants that. So he's going to try to find a way to get out of this despite his jawboning, if you will. Okay, so trying to talk tough, but it doesn't work. It doesn't work with Iran. Okay, so the reality was set in the closer you get to the midterms. Okay, so I just think oil is very negative. I mean, despite a war, it's still at $75 a barrel. That's like, people were saying it's going to go to 200, and it should have, but it didn't because there are mitigating factors. We don't know what's going on, but oil is getting into the market. Okay, and it's not just the SPR. Okay, there's other mitigating factors that affect the supply of oil, and including you can't disregard the fact that there are substitutes. Okay, so what do we have here? Oil rebounding as expected. This alleviates the oversold conditions, and I expect it to go back down again. Okay, that's what I expect for the war fears. Okay, so that was barrel one of the double barrel shotgun is the war fears. The second thing that's dragging this market down is the semiconductors. Look at SMH. Okay, SMH is key. Today up. Okay, we said this is a super strong bull market. We want an excuse to go long. Will it hit the 50? Well, that's when you should go long. That's the first time at least you should go long. And I'm looking to go longer in this sector. We did a trade on it. Okay, we did a trade on my favorite stock, MU. Okay, MU was close to its 50. I sold the put. As you can see here, I sold the put at the $700 level because at the time it had an IV, implied volatility, of 130%, and I did it very short term. Okay, it expires next week, so I want to do more. Okay, I want to do more. I'm looking to add to this. Okay, what I did exactly is, let's see here, MU, the calls on this side, the puts here. I sold. It's written over here. I sold the 700 put, And I got it's trading right now for 470 to 495, but I did it at $6 in the morning when the stock was lower before the rebound. And look, the expiry is in July 17th, which is the monthly expiry. Next week, 9 days to expiration next Friday. Okay, very short term. I expect this to crush. I expect the volatility to get crushed. Okay, as we approach the end. Okay, this is go time. Okay, and I like that. I like the fact that mu is approaching key technical levels and that the IV is very, very high. So you can go very, very short term and book your money quickly. Okay, so I sold some couple puts there and I want to do more. Okay, this is the sector that I want to be in. I want to sell this strong sector. Okay, I know everybody's saying that, look, if you look at the Kospi, Korea was down today, but it's noteworthy that Korea is down today, which is supposed to be a proxy for the AI market. I don't buy it. Maybe a proxy for the Korean chip market or for the Korean two-stock market, because it's basically two stocks. And it's down. Look, it was down 5% today, yet our chip market, SMH, was up 2%. So we are much stronger than people think. So I like the chip market, okay, and everything else. Like you can have Amazon. Look, Amazon is catching bids. It's pretty strong, okay. So you have like the hyperscalers also doing well is what I want to say, but I want to focus on the chip market because remember, a couple weeks ago we did an NVDA trade. We did it around here when it was approaching the 200 and after a pullback, because we were seeing that NVIDIA is not behaving like a typical chip market. It already had its down move and it was like getting to the point where it was half like approaching a support and neutral. So any up move, any positive news after the chips have been going down, NVIDIA will go up. Okay, and that's what we did. For NVIDIA, we did something special. We, let's write it here. We sold the 185 put, which is this support line here. It's 184, so I'm just going to we did it twice. Okay, we sold 2 puts here, and we financed the call. We bought a call, and we sold the call here, call spread. So we did this call spread, okay, 10 wide, 205, 215, and we sold 2 puts in NVIDIA, and we did this for a credit of about a $1.30. And this too will expire in next Friday, okay? So even if it goes much higher, we'll realize our maximum profit here with this call spread, and the puts will probably expire worthless if we go higher. So yes, I'm liking the chip sector. I'm liking the NVIDIA, which is like a hybrid. It's half and half. It's behaving half and half. Half chip stock, half, let's say, big tech stock, okay? So yes, we did that in NVIDIA, and it's looking good. So SMH, guys, look for reasons to go long. Look for reasons to go long. Don't get caught up in anything else, because what you should be looking at is the strength of the SPY. Let me get rid of the moving averages. The SPY is extremely strong. You should be looking to go long, okay? Yes, we have longs in other sectors as well. We want to diversify, like we mentioned Nike. Nike is doing fairly well, okay? I expect it to go to the 50 and then 60 eventually. But the other like non-tech stock that we played, SFM, Sprouts Farmers Market, is not doing well. Okay, it's down. Okay, it's right at the border of where we bought our call at 80. So mixed results. This one not doing well. Nike doing well. Our NVIDIA doing well as well. We have a number of plays that are doing well, and even Intel. Like remember Intel when we were short Intel. That's good too. We sold. We got assigned, and now I sold beforehand around here. I sold a put on Intel at the $100 level for $2. So all of these puts that we sold during this way up that we were short amount to about $10 in credit. So our break even is going to be about 98. Sorry, more than $10 in credit, about 12. Okay, because we sold this $10 put here because we are short now. So we're selling covered puts, if you will. So what we did here was we sold a put, okay, because we're short for $2. So for around 2 something, I can't really remember, it was a while ago. So we sold the put that's going to expire next week. I hope Intel stays at the highs here, so it expires worthless, and we could sell another one or cover our short completely. Okay, I don't like Intel. I like everything else. I just don't like Intel. It's the worst of the lot. Okay, so maybe I will cover the stock. Take at 100, we're basically breaking even. If it goes back down, remember we're shorting it from 88. Okay, so 100, we're basically breaking even. If I can go back down there, one more push down would be great. Maybe the war heats up, and I don't know, Kospi goes even lower, Korea goes lower. Maybe we can cover it. Who knows? Okay, but so far, generally speaking, I want to go long this sector, just not long this stock in particular. I don't like Intel. Okay, but I like AMD is another one. Anyone that is, look at that, much better than Intel. Okay, so that's it. Let's reiterate, guys. SPY, war fears, you're going to keep having these fears, but look at the underlying strength of the technicals, the sentiment, and the fundamentals are strong. Earnings are increasing. And that's what the mother's milk of stocks is. Forward earnings expectations have increased. The earnings seasons have been very, very well, have been doing very, very well. They've been beating. So I see no fear that will destroy this market yet, even worse. And inflation's coming down. So it's all looking good, yet the fear is still palpable. And that, my friends, is what gives us the opportunity to enter trades in an opportunistic fashion. Okay? So that's it. Let's see what happens the rest of the week. Catch you guys later. Bye.